What's going on? Alex here, and today I'm answering your tax questions from Reddit. Now, this first question comes from clothing donations, fitting enough, and the topic is $50,000 or 50,000 clothes to donate for taxes. We'll see if it's $50,000 or not. So about 8 years ago, my friend was going to start a used clothing shop. I let him store an unbelievable amount of recently dry cleaned clothes at my place. That project failed, and he said I can have the clothes. Eyeballing it, there has to be at least 50,000 items of clothing at my place, occupying a space of 10 feet wide, 30 feet deep, and 6 feet tall in cardboard bins. You're a very nice person for letting your friend store this at your place because that's a lot of stuff. Let's say they're all clean and in good shape. Can I donate them and itemize to reduce my tax obligations? Would I need any proof of purchase, or what about getting audited? I just find it eerie that if the IRS asks me where I got the clothes, I just say my friend gave it to me. So there are a few interesting issues here, and I think this situation overall touches on some of the rules applicable to non-cash charitable contributions. That's when you give property that is not a cash donation that you make with a credit card or directly from your bank account to a charitable organization. So there are all sorts of rules to prevent taxpayers from taking more of a deduction than they're really eligible for, and we're going to discuss some of those in answering this question. So just to make this a bit more applicable, we're going to pretend that 50,000 items of clothes is worth at least $50,000, right? Because if they're worth less than $1, that would be kind of rough. So let's just say $50,000 in fair market value of clothing that is possibly going to be donated. What are the tax implications and how do we approach this? So clothing donations, you're going to have 3 obstacles to overcome in terms of getting a tax deduction from an income tax perspective for the donation of these clothing items. And I'm going to go into them one by one so that we can get an understanding of what's going on. The first issue is basis. All right. So when you're donating, let's say, $50,000 of clothes, the first question is, what is your basis? Meaning, typically, what did you pay for those items? Now, I know that they were gifted, but just for argument's sake, let's pretend you bought them for $10,000, right? And then they're worth $50,000 when you give them away. That $50,000 is not going to be the deduction that's taken for income tax purposes in terms of a charitable contribution. It's going to be the $10,000 basis, all right? It's the lower of, okay? And essentially that appreciation in the items that you've owned does not become a charitable contribution if you were to give it away because your basis is still that $10,000. So when you get a gift, the way the gift tax rules are structured in terms of applying those to basis, you are going to get transferred basis from the donor, which is the person giving you the gift of the clothing to begin with. The question mark here is, what is that person's basis? Because that is going to get transferred to you, and that's going to be your basis in terms of figuring out what your charitable contribution is. And if you don't know that information, that's going to make it a lot more difficult to justify the deduction, because ideally you'll have receipts to show that say, hey, here's the basis that this person has in these items that were then transferred to me, and now I'm making a charitable contribution. That's how you link all of this together. But the lack of documentation or the lack of basis information from the donor, from the original donor to you, is going to create a problem potentially, because if this is questioned down the line, you're going to have very little in terms of backup to justify your deduction. And that can be an issue. There's plenty of court cases and there's plenty of decisions out there where deductions were denied because of lack of documentation. That's an issue you can run into. So the first significant question that I have here is, what is the basis of those donated items when they were essentially given to you as a gift, because you get the transferred basis from the donor? That's a question mark, which would prevent you from knowing what your basis is in those items, because to take the charitable contribution, you need to know the basis. That's the first challenge. And let's say, just hypothetically, that the transferred basis you get is $30,000 fair market value is $50,000. If you were to donate all of these items, it would be the lesser of. So you're looking at $30,000 possible deduction just to begin with before we talk about all these other implications. But on a very basic level, it's the lesser of your basis or fair market value. Now, likewise, if this person had paid $70,000 for all of these clothes, and that would be your transferred basis, if the fair market value is now $50,000, it's going to be, again, the lesser of. So you take that $50,000 as your possible deduction number to begin with before we discuss all these other applicable rules. So that's going to be the first challenge, is figuring out what that basis is. You're saying that this was 8 years ago, so there may be some issues in finding that documentation. And really, unless you have some sort of support for your basis, in general, your basis is considered to be zero if those records don't exist. So crucial point there. The second challenge that you're going to encounter in this situation, again, assuming the clothing's worth $50,000 now, is the fact that based on the fair market value, you may need to get a qualified appraisal of those items that you're donating to take the deduction at all. And that limit applies to a single item that you're contributing to charity or a group of similar items, which would be applicable in this case, that you're using to contribute. So what are we talking about? Let me pull up the tax form that you're going to deal with when you make non-charitable contributions in general. And this is the Form 8283, again, non-cash charitable contributions. And if you're donating property of $5,000 or less, you'd be dealing with the front of this form, all right, page 1. But in your situation, assuming that the fair market value is, let's say, $50,000, you're going to be dealing with Section B, because this is for donated property over $5,000. And if you look at the instructions for Form 8283, they detail the fact that you're going to need a qualified appraisal. There's a few issues that you need to get over there as well. There's a few rules applicable to that whole process. But at the end of the day, you need to have a professional essentially value out that inventory that you're holding so that you know that it's worth $50,000, $30,000, $10,000, what have you. But the fact that you're donating a group of similar items worth more than $5,000 would put you into the requirement to deal with this whole appraisal situation. So that's a cost in and of itself. And at the end of the day, that's going to be required for you to take a deduction since the value of the donated property, the similar items, is over that $5,000 threshold. So that's going to be yet another challenge before you can take that deduction. Finally, the charitable contribution limits, all right, because whether you're contributing cash, non-cash items, what have you, there are limits that are applicable that will reduce possibly the amount that you can deduct in a particular year in terms of the charitable contribution. So what are we talking about? So if you pull up the instructions here for charitable contributions, all right, and this is publication 526, okay? You can find this online on the IRS website, and this is the 2019 version. So if we go to this section called Limit on Deductions, you'll see that depending on the type of organization that you're contributing to, and depending on the type of item that you're contributing, whether it's cash, non-cash, and so forth, there may be a few different limits that are applicable based on the AGI, or adjusted gross income, in a particular year. And let's say the applicable limit is 50%. If your AGI, or adjusted gross income, is, let's say, $100,000, let's figure out what we're talking about when we talk about AGI. Let's pull up Form 1040 just so we have a good idea. And looking at this wonderful tax form, one of my favorites, you'll see that adjusted gross income for 2019 is on line 8B, adjusted gross income. So that's what we're talking about when we reference AGI. Let me make sure you can see that. Okay. All right, it's right here. So if you look at line 8B on the 1040 for tax year 2019, 2020 hasn't been put out yet, you'll see that that's the number we're talking about when we refer to AGI in the context of charitable contributions. So let's go back to publication 526. And it says that the amount you can deduct for charitable contributions, let me make this so you guys can see it. All right. It's not going to be easy for me. Okay. Like this. All right. So the amount you can deduct for charitable contributions generally is limited to no more than 60% of your adjusted gross income. Your deduction may be further limited to 50%, 30%, or 20% of your AGI, depending on the type of property you give and the type of organization you give it to. A higher limit applies to certain qualified, so on and so forth, not really applicable in this case. So let's take a quick look at the types of organizations and the limits just to get a general idea. We're not going to go too crazy. The first category, 50% limitation, is for churches and conventions or associations of churches. Okay, so generally if you give to a religious organization that's recognized as a church, then you would be looking at the 50% limitation. Similarly, there's a 60% limitation if you make cash contributions throughout the year to an organization listed under that 50% category. So it gets a little bit involved. Publication 526 will guide you through all of these different limits. But at the end of the day, if you're looking at Form 1040, you want to know how much of your AGI you can deduct in a particular year. So let's say AGI is $100,000. If the applicable limit is 50%, then the most that you can deduct for charitable contributions in this year would be $50,000. But let's look at it a different way. Let's say your AGI is on the lower side, so you're talking about $10,000. So your maximum charitable deduction, if you're looking at that 50% limitation, is going to be $5,000 for tax year 2019. So you might say, well, what happens to the rest of those donations? Do they just disappear? Do I just lose them? Well, your unused charitable deduction in a particular tax year is available for the next 5 tax years. Okay, so you have to use it within 5 years. And if you have adequate income next year, meaning if your AGI is $20,000 in 2020 and you have $30,000 in charitable contribution deduction roll forwards that you haven't used, then you'd be able to offset some of that income, meaning if the 50% limit is applicable and you have $20,000 AGI, you'd be able to deduct $10,000 of those charitable contributions. But you have to use it within 5 years. That's the stipulation. So that is going to create yet another challenge in terms of taking the deduction in a particular tax year, as those annual limits are applicable. And if you don't have enough income in one year, you may be able to deduct it in a subsequent year. But again, there's certain implications to take into account there. I don't want to get too crazy with that. But quite simply, those are the 3 challenges that you're going to be facing in taking this deduction. The first being the basis question. You really don't know the basis, or you didn't really detail it in your response, so that's going to create a bit of an issue. Certainly should have some documentation of basis if you're going to make a charitable deduction in a significant amount, because those can very well be questioned. If you don't have the records, it could create a problem. The second thing is the appraisal. So you're going to have somebody go through all these items and give you an assessment of what the fair market value is, and that assessment is going to have to be written. It's going to be all official, and there's a cost inherent in getting that appraisal too, because appraisers aren't going to work for free. Finally, you've got the annual charitable contribution limits that are going to be applicable. It could be 50%, 60%, what have you, but you have to make sure that whatever year you make this charitable contribution, that you apply the proper limitations, and then you track any excess deduction that you didn't take in a particular year moving forward, so you could take it in future years when you have adequate income to do so. So hopefully clothing donations, this is helpful for you. Hopefully this clears some of this stuff up. Again, there's a lot of assumptions here, but ultimately you have to be careful that you cross your T's, dot your I's when you deal with charitable contributions, because there is unfortunately a lot of abuse in this area, and the IRS isn't really crazy about people taking advantage of charitable contributions to try to affect their tax situation in a way that's not in compliance with the spirit of the tax code. So hopefully this was helpful. If you enjoyed this video, feel free to comment, like, subscribe, share the video, share the love. It's all good. And certainly there's going to be more content coming soon. So hopefully this was helpful. Thanks for watching.